On Point with Craig's Investment Partners.
The information provided here is general in nature. It's not financial advice and it doesn't take into account your situation, objectives, goals, or risk tolerance. All investments are subject to risk and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services or to view the Craig's Investment Partners financial advice provider disclosure statement, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. Please engage with us. We love to get feedback, questions, and comments on this material, and if you enjoy it, please rate it, or even better, share it with a friend or colleague. Morning team, hope everyone's well. Let's talk about last week across financial markets, then let's turn our attention to the week ahead. It was another volatile one. The S&P 500 index in the US officially fell into a correction for the first time since 2023, so that means down 10% from a peak. It did rebound strongly on Friday, so there was a very strong rise in the market on Friday. We were closed, but the little old New Zealand market might follow suit and play a bit of catch up with a bit of strength on Monday morning. Wait and see. However, despite that Friday rebound, the US S&P 500 did still suffer its fourth consecutive weekly decline. It was down 2.3% for the week, and it's now down 8.2% from its peak in February. Other markets a bit mixed. The UK fell 0.5%, Europe was 1.4% lower, emerging market equities slipped 0.8%, Japan, the only major market to rise, the Topix was up 0.3%. Closer to home, the Aussie market, the ASX 200 down 2%, and the local NZX 50 was down 1.1%. Interest rates, bit of movement during the week, but they actually ended the week pretty much where they started it. The US 10-year Treasury at 4.3% and the New Zealand 5-year swap rate finished at 3.7%. Let's look back at some of the key releases last week, and US inflation was in focus, and we actually got some good news on this front. Need a bit of good news lately. A softer than expected inflation report for February. The Consumer Price Index, the CPI, rose 0.2%. That was below forecasts, and it was the lowest in 4 months. That's how it went for the month. On an annual basis, that headline CPI fell back to 2.8% in terms of the annual change. That was below January's 7-month high of 3%, and it was below forecast for 2.9, so came in at 2.8 for February. The core CPI also a little weaker than expected, and it slowed to 3.1% on an annual basis. That was actually the lowest we'd seen in almost 4 years, so not too bad. Not so good in terms of consumer confidence. The University of Michigan survey saw consumer confidence slump further during March. Headline sentiment fell to 57.9. That's the lowest since 2022, and it was below forecasts. A lot of respondents talking about how the high level of uncertainty around government policy is making them nervous. And that's understandable because it's pretty hard to plan for the future when you don't really know where the goalposts are going to be, isn't it? Inflation expectations also rose in this survey, which is not something we want to see. The 1-year forward expectation rose to 4.9, highest since 2022, well up from the second half of last year when it was sort of in the high twos. And probably more worryingly for the Federal Reserve, which meets this week, and we'll get to that soon, longer-term inflation expectations rose in this survey. They hit 3.9%, which is the highest since 1993, and it's just a survey. That's not where inflation is at. But it is worrying when you see expectations move to those levels, because your expectations tend to drive your behaviour and affect the decisions that you make. So that's why we need to keep a close eye on things like confidence and sentiment and what people are expecting. Looking ahead to this week, it will be a busy week for central banks. We've got 3 big central bank meetings, one in the US, one in the UK, one in Japan. The most important will come from the Federal Reserve in the US, which is scheduled to release its latest decision at 7 o'clock on Thursday, New Zealand time. We're not expecting any change to policy settings, although what we will get is a fresh summary of economic projections, a new forecast set, a new SEP. That'll be the first since mid-December, and it feels like a lot's changed since then, so be interesting to see how the Fed's thinking has changed in terms of what they are expecting. The press conference will also be really interesting. Markets are volatile. You've got talk of recession. Everyone's worried about tariffs and what they might mean. What does it mean for inflation? What does that mean for growth? What does that mean for interest rates? So Fed Chair Jerome Powell will field plenty of questions at the press conference at 7:30 on all of those topics. In terms of current market pricing, the expectation is that the next move from the Fed will be down and that will come in June. So a rate cut is fully priced by June. There's some chance of a move earlier in May, but June looks to be most likely. And over the course of 2025 on the whole, markets see at least 2 rate cuts from the Fed, maybe 3, but definitely 2. So that's how things are shaping up. Now, a day ahead of the Fed, the Bank of Japan will deliver its latest decision. No change to policy settings expected there either. The BOJ obviously is increasing interest rates, so it's moving in the opposite direction to every other central bank in the world, and that next move is expected to come in July. The Bank of England rounds out that trifecta. It will follow on Thursday evening, and it too is expected to hold the line. There will be more rate cuts from the Bank of England, but they will come closer to the middle of the year, maybe June, maybe May at the earliest. So 3 central bank meetings, Japan on Wednesday, the Fed being the highlight, 7 a.m. on Thursday morning, and then Thursday evening, the Bank of England. No change expected for any of those 3, but with everything that's going on, investors and financial markets will be watching closely and looking for changes in tone, how they view some of these issues, and what they're expecting for the future. So it will be all about the forecast and the commentary and how they sort of approach the press conferences and the Q&A sessions. So big week for central banks. Here in New Zealand, the GDP report will be the highlight. This will be for the December quarter, the last 3 months of last year. It's out at 10:45 a.m. on Thursday. Kind of old news, October, November, December. We sort of know how that went. We've moved on. We're now into 2025, but it will still get some attention. The local economy has obviously been in recession. It's contracted on a per capita basis, at least, for 8 consecutive quarters. So it's been a pretty ugly period. We do expect a recovery in 2025. I'm not sure that will be particularly evident in these figures. You might see a bit of an uplift. I'm sure you will compared to the previous 2 quarters. So the Reserve Bank is picking an increase of 0.3% for the December quarter, and the economist average is slightly more than that, 0.4%. So still pretty subdued, but that would be a whole lot better than what we saw in the September quarter last year or the June quarter last year when things were pretty ugly. But on the bright side, if it comes in at 0.3, 0.4, that would at least point to a more stable economy, and then we can build on that as we return to a more reasonable growth rate, hopefully, over the course of 2025. Outside of the GDP report, we should get the results of another dairy auction early Wednesday morning. The last one, things slipped a little bit. Prices were down 0.5%. That was the second consecutive fall. They're still up this year. They're still close to 2022 levels, and that payout of $10 at least from Fonterra looks to be locked in. They reconfirmed that again last week, and they've actually got their full year earnings release on Thursday, Fonterra. So we might hear more on Thursday from Fonterra, but a day before that, Wednesday morning, we'll get the latest dairy auction results and potentially a housing market report here in New Zealand. That's something else I'm keeping an eye out for. This would be from the Real Estate Institute. It would cover the month of February. These are usually released about the 10th business day of the new month, so it might be out Monday, Tuesday, Wednesday, or thereabouts. Things still pretty sluggish. In the January report, we saw volumes increase from a year earlier, from January the previous year, but the days to sell is still sitting at quite elevated levels, and prices have still been slipping back a little bit. So be interesting to see whether there is more evidence of any housing market recovery if we see that report this week. Other things to keep an eye on out there in the big wide world, there are a few more economic releases that are due. We'll get retail sales in the US. I won't go into that. We'll get monthly activity indicators in China Monday afternoon. Industrial production and that sort of thing, unemployment. We'll get a labour market report in the UK. We'll get inflation in Japan. We'll be watching Germany. Because there will be some negotiations over that proposed fiscal expansion. You've got the federal parliament and some of the other legislative bodies expected to hold votes this week. I think there's one key vote on Tuesday and then another on Friday. And then the new parliament starts in March 25th, I think. That's when they first sit. So Germany might be in focus. Other than that, a couple of corporate releases to keep an eye on. Here in New Zealand, I mentioned Fonterra. That is on Thursday, I think. And I think the Warehouse is on Friday. Elsewhere, there's a couple of big names. Tencent, FedEx and Nike, all interesting for different reasons. We'll also be watching for more talk of tariffs. We'll be keeping an eye on the market volatility, which I think there's a good chance that continues over the near term. Just so many things going on at the moment. If you do want my take on the S&P 500 falling into correction, what it means, why is it happening, where could it go from here, how worried should we be, what should we do? I did record an episode a few days ago, so dig that one out, have a listen, get in touch with your advisor. That will be my best advice. This is when they earn their keep during these periods of volatility. You want to make sure you make the best decisions, and you also want to make sure that if opportunities do arise, you will be able to take advantage of them. So a lot of reasons why you should be making sure that you are in good communication with your advisor at a time like this. But that's all for today. Thanks for listening. As always, we'll talk again soon.
For more insights, visit craigsip.com.